Welcome to CAM Radio, an Ahead of the Curve initiative by Cyril Amarchand Mangaldas, bringing you every Friday the latest in legal and policy. Stay tuned. Enjoy listening.
Hello and a very warm welcome to everyone. There is a question that has often been asked that has a lot of varying answers. What should the purpose of a corporation be? The global consciousness seems to be divided. Since the COVID-19 pandemic, it seems like a phenomenon that has picked up more traction is ESG, environmental, social, and governance. Some see them as buzzwords, others see them as the pillars that will shape the future and destiny of businesses. Can a country like India become a beacon of potential when it comes to the global ESG landscape? What are the legal considerations of ESG in India that could lead to a more sustainable, equitable, and resilient future? And is this something that's even here to stay? To break it all down, please help me welcome Bose Varghese, Senior Director ESG at Cyril Amarchand Mangaldas. Bose, it's my sheer pleasure and privilege talking to you, and we had a very interesting conversation. So, just off the record now, also, my first question to you really is that is ESG as important as it is made out to be? And I ask you this specifically given the sound bites coming from the West. Yes, Bose.
Thank you. Thank you, Shrija, for having me to discuss this important topic. Now, your question, a very interesting question because, in that question, there is an admittance that it is considered important. And let's see why it is important. Mm-hmm. ESG is not a fad. It's not a hot topic because of a celebrity endorsement. It's important because ESG has some inherent risks and it offers a lot of opportunities, whether you use the terminology ESG or not. And therefore, managing these risks and embracing these opportunities become very important for businesses for their long-term sustainability and success. And that is the crux of it. And that's why businesses across the world are looking at ESG as an important area. And today, ESG is integrated into business strategy and the investment world. And it will remain so, and it will become more important as we go forward. Just to give you an example, look at climate change. Mm-hmm. Climate change is threatening, all the terrestrial and aquatic ecosystem. It's threatening our sustenance and existence. And at the same time, look at the opportunities, the whole response to climate change, the transition to a low carbon economy that we are looking at today, or we are witnessing today. And that's actually presenting the biggest opportunity of a century. So such high risks and opportunities, that's what ESG brings. And therefore, it will remain important going forward.
Thanks for that, Bose. And I think it's sort of very well put that it's a strange sort of concoction of once in a lifetime opportunity, which also comes with huge amounts of risk. And where there is such an opportunity set, you have huge amounts of capital coming in to encash on that, right? And when you talk about capital allocators, yes, you have to talk about sponsors of capital who are looking at this systemic changes from a long-term perspective. And then comes the private equity investors, who basically are the people who come in with a long-term point of view and have a fixed capital mindset, right? There's a definite sort of amount of time. It's not like hot money. It is a long-term capital commitment. I want to understand from you that when you speak to this class of capital providers, the private equity investors, what really is the sense that you get from them when it comes to ESG investing? Is the ESG investing happening because it is music to the ears of their LPs? because they want to raise more and more ESG funds, because perhaps ESG fundraising is a little more easier on the fundraising climate. What is the kind of sense that you get from their aspirations?
Well, if you take a step back and go back a few years, the terminology ESG itself was brought in by the investment community, and ESG really got a leg up when the biggest PEs of the world really embraced it and started pushing it through their investments. And today, I mean, trillions of dollars are invested into ESG assets across the world. And it's, as you said, they are focused on investment and profits, and they do long-term investments. And that sits well with sustainability or ESG, which is also long-term.
Mm-hmm.
And therefore, they see ESG risks. So their due diligence is always fine-tuned towards, finding out those risks and weighing them in the evaluations and investment decisions. They are also looking at the whole new, innovation technology space that offers huge opportunity. So while you might see some, tremors in this space, or news to the contrary, how PEs and big investors are looking at it, fundamentally, they have not moved away from ESG considerations. They continue to focus on diligence. They continue to focus on, investment decisions where ESG considerations are weighed in, and that will continue to. So some of them may be quieter than they used to be, but fundamentally, their investment process hasn't changed. And increasingly, I mean, across jurisdiction now, there are regulations, and so therefore, they have more work to do, actually.
Tell me one thing, Pose, and I think it's interesting that you mentioned yourself that yes, there could be some sort of sound bites or narrative sort of coming in that some of the funds, which basically kind of institutionalized and coined the word ESG, seem to be sort of pulling back, right? Uh, that is one sort of dynamic happening. Do you think it's a worrying sign for the future of ESG, especially in India, as something that may not be able to stick around in the long run? I specifically ask you this because just see sort of what is happening. And something interesting has been happening in the US, for instance. Money managers seem to be abandoning ESG products. And there was this major report that in September 2023, BlackRock was said to have told US regulators that it was planning to close some sustainable emerging market bond funds with combined assets worth more than $55 million. And then places like State Street, Columbia Threadneedle, Janus Henderson, Hartford funds were said to have closed down more than 24 ESG funds in 2023. So do you think these are worrying signs for the future of ESG? What is the kind of sense you get, especially for ESG in private equity and India?
I mean, that's a loaded question, and I think you have a lot of points that you brought up. It is true that especially in the US, there is a sort of talk or a counter push to ESG. People are terming ESG to be woke, and it's a liberals program, and they have no right to push these things. And it's interestingly, this divide for and sort of against ESG is ideologically and politically divided, I mean, strongly across the political linings in the US. And because of this sort of a pushback, and because of some legal threats in some states within the US, where investors focusing on, or fund managers using ESG for fiduciary decisions may be retaliated through other legal ways. And therefore, we see some of these reactions from some of these large investors. Some of them are keeping quiet and they are not talking as much. You don't see ESG popping up in their annual letter to their LPs, and they're just biding their time. And of course, if there is an impact on their own business, they need to safeguard that, and they would probably do that. But these, by and large, I think in a way, this is good, because if, in any transition, there is the reality and there is some chaff, and I think this will force investors and businesses to really focus on what is really important under ESG and what they really need to, tackle and, build a program around. And, so basically going back to the fundamentals, and, you look at real risk, whether you are using the term ESG or not. As I said, some of these risks are there, right? When you fundamentally look at your business operations and you look out and you see these, opportunities. So just, building on these fundamentals, you can carry forward. And therefore, ESG is not going to go away. ESG terminology may or may not change. We had sustainability for almost 2 decades, and then we switched to ESG. There could be a, change in terminology, but, fundamentally the program, the ESG, the concept, I don't think it's going to change. It's going to gain strength. And, ESG in itself, it's transforming. It's been transforming. It hasn't reached its end point. So I think it's okay. And I think it's a natural process. And I think ESG will win at the end. LPs, a lot of LPs are, as you brought in the LPs, is there a push from LPs? Of course, there is, some LPs are very, cognizant of supporting sustainable investments, and they are long-term investors, and they want to support, that type of investment. So there is a fair amount of LP interest, for PEs to cater to. But regardless of, when it comes to India, the global PEs bring in money and they invest here. In fact, compared to the rest of the world, ESG is pretty strong in India now, and it's getting stronger. And we have several new regulations coming out, and corporates are taking it very seriously. In fact, we are probably looking the strongest at this point among all the, ESG leaders globally.
Thanks for that, Bose. I think it was a very important question which needed to be addressed, because these kind of contradictory kind of sound bites coming from the West can really, on the surface, look like it's marring the interest. But you addressed the question pretty well, saying that no, Shrija, on the contrary, ESG is only going to strengthen. There could be that because it's a transformative concept, the concept remains the same, the terminologies could perhaps change. Like, for instance, from sustainability, it went to ESG, but the horizon and the future outlook for ESG investing in India has not been stronger. So I think this was very important to address. Now, I think it is also just like a segue question to this really is that there's some interesting statistics when it comes to ESG. And I think which is perhaps the underlying parameter which is guiding the entire ESG investing philosophy, especially when it comes to private capital, which till now constitutes the largest chunk of investment in this space. There's, according to ESG and Global Investor Return Study Research, companies with better ESG ratings seem to outperform peers who had lower ratings. How much in your conversation with private equity investors or corporate sponsors of capital do you think that this kind of thinking is there? That with ESG ratings, the investment returns would be higher? Do you think that thinking has set in deeper and deeper, especially from an Indian context?
I would say yes, and I would answer that positively. But there are some nuances to it. See, the rating, investors use the rating, to look at two things. One, obviously address ESG risk, and a well-rated entity would have done a good job of addressing the ESG risk, and perhaps they would have, within their sector or area of operation, embraced new opportunities and the opportunity to innovate and create a better value. And therefore, they see that as a building block. And if their thinking is that if that is done right, these companies who are doing things right, addressing all these future likely risks, in the long term, in the long run, they will sustain and be more successful compared to others who are not. And I think in the last decade or so, there are enough examples and statistics to confirm the same. But at the same time, it's also true. I mean, you will see enough statistics showing that during any economic downturn, ESG funds perform. They also go down like other funds, and it's natural. But I think the important point to remember is that ESG is really long term, and and if short term profitability is the target, and I think that's where a lot of struggle comes from. When there is a short term profitability motive, and there is a long term compulsion, for transition. How do you manage that? I mean, that's a big challenge. I mean, if you look at the auto industry, in a country like India, where automobile demand is, I mean, really on the upswing, you can capitalize on that, and at the same time, the future is EVs, and you need to plan and transition accordingly, so that 10, 15, 20 years down the line, you continue to be a big brand and big, name in that sector. So, I mean, when there are business downturns, ESG funds will take a hit. They are not immune from all the other financial factors, but comparing apples to apples in the long term, I think those businesses who are actually tackling their ESG issues, both risks and opportunities, I can't see why or how they will not come up ahead of others.
Okay, fair point. I think this entire argument, especially in the auto industry, that if you don't move to the EV space, you're practically extinct, right? Because
Yes.
look at the climate or the environment. I mean, disruption can happen in any way. Perhaps this is the climate which is telling you to sort of evolve. Because if you continue to extend the model that you are doing right now, 5 years or maybe like 10 years hence, you won't exist as a brand. So as ESG continues to evolve, and you have continuously used the word ESG risk and opportunities repeatedly in this conversation thus far. So I think it is just important to spend some time understanding what really constitutes ESG risk. When one understands about ESG risk, we're basically talking about assessing how ESG compliant a company is, right? And there perhaps comes the risk assessment, which you do with a process called the due diligence. Some companies are also faking it, saying that we are ESG compliant, while some companies could also be true. There are bad apples in every sector. I want to understand from you that what is the lens for looking at ESG compliance? It is a company ESG compliant. There are set of formulations given by the SEBI. In India, what really has been the report card like in terms of corporates faking it, startups faking it, or companies faking it? Or somewhere do you think that perhaps there is a naive understanding of ESG as yet?
Yeah, I mean, thank you for that question because it's a very important question, and I don't think there's an easy answer to that. If you look at the regulations, even the SEBI regulation, that is simply asking companies to disclose. You disclose what you're doing. You are doing probably something really great, not so great, or nothing, but disclose. Now, when somebody is looking at the risk of a business, I think they will have to go beyond that because the disclosure regulations do not mandate any particular action, such as you should reduce your water consumption or you should reduce your emissions or things like, or you should take a net zero target, any of that. So when somebody is looking at a risk, they go the fundamental route. The regulatory part is just a compliance risk. They look at it. If there is a particular SEBI regulation applicable to a business, I mean, during the diligence, they will look at whether that regulation has been complied with. Now, when somebody is looking at an ESG risk, they go fundamentally. They look at E, S, and G. They will, individual basket. They will look at the sector. They will look at the geography. They will look at the business's value chain. How dependent are they on their value chain? Where they are spread, their geographical spread. How vulnerable they could be to some of these ESG factors, all that will go into it. I mean, they could look at, for example, water. If there's an industry that is water intensive, where they are located, is that area water stressed? Where they're getting the water? Do they have an issue with water supply? How efficient they are with the water they are getting? Things like that. They will look at things like, of course, any regulation, environmental, labor, human rights, ESG, all those regulations, regulatory compliance is anyway looked at any point. Beyond that, I'm saying from pure ESG fundamental risk point of view, during the due diligence, they will look at these companies. Now, this business is sourcing material from, they are in the agri-based business. They're sourcing, say, potatoes from, different parts of the country, and they will look at where they're procuring from, what is, how possibly that supply chains can be disturbed. All that will go into the risk assessment. It's a process that is a bottom-up process. They will look at each element of ES and G, of course, depending on the sector, scale. These different elements play out differently, and of course, that will consider during the due diligence. And I will stop there with that.
Thanks for that, Bose. And I think at this point, I think it's just sort of important and pertinent for me to ask you the question on and bring out sort of the word which is greenwashing. And I think greenwashing is really happening, if you ask me in the real term, is happening on both sides. From the fund side, perhaps there are motivations from some fund managers to really showcase themselves as funds which are investing into ESG because that perhaps is music to the ears of their LPs. Now, on the other side, when you have promoters and investee companies, they also have to fake themselves as green because that is music to the ears of their investors, of private equity investors who now have capital allocated specially for ESG. What is your view on greenwashing? How much of that do you think is on the ground really happening on both the sides? One from the private equity investor side and the second from the investee company side.
Well, I think greenwashing is, It's a important topic in itself, actually. And, I don't know how many people are aware of the fact that greenwashing is defined actually in the regulations in India. And it's actually hidden, in one of these SEBI regulations. And it's defined, I'm going to read that. It's defined as making false, misleading, unsubstantiated, or otherwise incomplete claims about the sustainability of a product, service, or business operation. So that is how it's defined. Now, we all know that greenwashing is so rampant. I mean, whether it is a company, advertising for their products, builders, fund managers. I mean, there is a possibility of greenwashing everywhere. And why the possibility exists? Because the tag green has a lot of market value, right? And it's that's where the fooling part comes. If you are saying something is green and someone else is buying into that, and then buying a product or service or investing in a fund based on that claim. Therefore, greenwashing can hurt consumers and investors, especially retail investors. And therefore, now a lot of regulations coming into place. The EU has, India has, surprisingly, including the SEBI's BRSR. And last year, SEBI has brought out this whole BRSR core. That the idea that the BRSR core must be third-party assured under a reasonable scope, so that there is full transparency and reliability of that, and then companies getting rated on that third-party assured data, and then investors further using that rating. So that's one level. Even in other ESG related regulations in India, SEBI has expressly brought in greenwashing considerations. For example, the mutual fund regulations got amended in 2023, and there the need to prevent greenwashing is called out, and many reporting and third-party verification requirements put on the asset manager to really address greenwashing. Similarly, there is again 2022, 23, the green debt instruments. The NCS regulation got amended. There also, SEBI has brought in the concept of greenwashing. And in fact, in 2023, SEBI has brought out do's and don'ts for green debt securities, which is essentially preventing greenwashing. So in India itself, SEBI has, consciously brought out guidance and regulations to prevent greenwashing, at least in the investment space. But on the consumer space, I think it continues unabated. I mean, you look anywhere, I think you can see examples of statements and advertisements that could be construed as greenwashing.
Thanks for that, Bose. And I think it was very, very important. And I think you sort of very, very beautifully explained that how SEBI has very, very importantly sort of taken cognizance of this very rampant activity, greenwashing, how they have defined it, what really are the activities that come under it, and definitely putting out this sound of caution, the word of advice for all the listeners who could be potential entrepreneurs and investors listening about it. Very, very well. But I think it is very, very important for me now to ask you that, both according to you and just given your experience in the ESG space, if you were to tell me that where is India exactly on the ESG regulatory landscape? And the reason I ask you this, that previously on this podcast, we had Arun, where we had discussed the digital data protection bill, and he sort of spoke about where India is, and he actually praised that how India has come up with this very, very interesting bill, which is not necessarily prescriptive in nature compared to what the EU has laid out. I want to understand from you, as someone who has spent so much time, energy, and so deep experience in ESG, what do you think? Where does India really stand when it comes to the regulatory landscape pertaining to ESG?
Yeah, so I think for in the last 2 decades, I think India was playing catch up, and in the last 3 years, India has actually caught up well, and in fact, I think India is probably at par or even ahead of the EU region, the by default leader for the rest of the world in this space. But our challenge in terms of regulations, I mean, a lot of aspects are covered by Indian regulations today. Interestingly, we also have, we used to follow what happened in other parts of the world. Today, we have two major pieces of regulation that puts us ahead of the rest of the world, including the EU. One is the regulation regarding ESG rating providers. India is the first country to regulate ESG rating provider. No other nation has regulation, to regulate ESG rating providers. The other is the reasonable assurance mandate for ESG data. At this point, no other country has an ESG reasonable assurance mandate. So in some of this, we have taken a leap and we are actually ahead of the world. And but our challenge is in the implementation, actually. These are all very brand new regulations. Some of them haven't even seen the first cycle of implementation. And, by being in this space for many years and having regular interactions with the industry and investors, I know the implementation is going to be a challenge. Living up to the spirit of the letter of these regulations, I think it's going to take us a few more years. But purely on the regulations point of view, we are we are definitely not behind any other nation or region, and I think we have taken a lead in many cases.
That's a profound statement coming in, that whilst on the regulatory aspect, India has done beautifully, the real detail will lie in execution and how well to be executed. At this point of time, I must also sort of urge you to sort of spend at least like 3 to 5 minutes explaining about ESG rating, because that is something which you brought up in this answer. What really is ESG rating for our listeners? Could demystify this very simply. How does it really work? I mean, are they really reliable?
I think how it works. I mean, it's logically thinking, ESG, under each of these three baskets, you have a set of key parameters, and these parameters, they vary for sectors. Some sectors are dry. For example, telecom industry is a dry industry. They don't use a lot of water, so water-related issues may not be that significant to them. That way I was giving an example. I mean, so they look at under each of these three baskets. Some of the ratings also consider ratings under different sectors. They do have a sectoral consideration. Some of them don't. They are sector agnostic. So they look at the building blocks of E, S, and G. What are the important parameters that should build up these blocks? And you look at social, you look at diversity, inclusion, number of women employees, pay parity, and women on the board, and so many different elements. And they decide for this particular sector. I think these 5-6 are the key KPIs, and then among those 5-6, they can again decide on a relative weighting. And then so bottom up, they build up, right? And then under S basket, they have an S score. Similarly, they will build up E and G, and they have individual scores for E, S, and G. And then there is again a relative weighting for E, S, and G to create a combined score. And that's how rating is done. So now no two ratings are similar. That's a fact. And actually, a lot of people would say that ratings are not very useful because they don't give you any useful insight. That I disagree with. Because of the typically the methodology. If you know how they have rated, what is the methodology and weightage they have used, and you can sort of go back and analyze the score a particular industry has gotten, business has gotten. So that therefore, ESG score, ESG rating can also be a benchmarking exercise for you to really see where you stand and improve. Now they are not really, useless. I mean, they are used by investors across the world. But I think they will probably use these ratings as the starting point. They will then layer these ratings with their own insights and their own intelligence, and before probably making a call. But for tens and thousands of companies, ESG rating is something that investors rely on, and that's why ESG rating is so popular. And no two ESG rating will match because, as I said, the methodology. I mean, they all consider, and then there are methodologies, rating methodologies that also give weightage to, the plan of a company. More than the numbers and performance. What is your vision and plan, where you're headed, that trajectory, and you are, so there are so many different combinations and weightages that methodology can adopt, and therefore you get different scores. But the fact remains that a well-rated entity, I mean, if you look across the ratings, I don't think a single entity can retain the same spot across any two. But a well-rated entity under one methodology, under one rating agency, you can fairly expect that that entity will be well-rated by others. And, within the, if you are one of the top rated, you can expect a similar result under other ratings. And this happens because, a well-rated company would have a reasonably balanced E, S, and G score, individual scores.
Yeah.
And even if the weightages change, that change will not be, substantial enough to pull you significantly up or down. And therefore, so the fact that, or the reason that these are non-reflective of real ESG, I don't agree with that. The fact that, or the reason that they are not insightful or useful for decision making, I don't agree with that either. But the fact remains that these methodologies differ, and if you understand the methodology, put in the time to understand the methodology, then these methodologies can be, and these ratings can be, a really good benchmark to improve yourself.
Thanks for that, Bose. I think that point has to be well taken, that you can't really take ESG ratings lightly. For a company which is rated well on the ESG scorecard, actually is very, very important for even private equity investors to look at them. But as you sort of pointed out, that is actually the beginning or the starting of the conversation, and then you layer it up with various due diligence tools. And the very fact that two ratings can never be similar because of different underlying methodologies, different parameters accompanying them. Course, what a delightful conversation on ESG and really peeling various aspects of it. We began the conversation with understanding the importance of ESG, to then really decoding what is coming from the West, what it means from India, the varying narratives that we have heard of the recent past, and you clearly busting those myths very clearly. Then we spoke about greenwashing, understanding the ESG risks and spending time on ESG ratings, and also understanding the mindset of investors and the investee companies in this area. I have to ask you lastly that someone like you who is leading the ESG practice at CAM, how do you see the role of law firms evolving within the ESG space in India?
Oh, thank you for that question, Srija. I mean, so because look, the ESG space is transitioning. I think the role of law firm will transition along with that. And we all know that, maybe as back as 5 years, I mean, definitely 10 years ago, there were no regulations. And therefore, ESG didn't come to a law firm at all. I mean, no client approached a law firm with any ESG questions. Now we are, at the beginning of this regulatory transition from voluntary. Today we have several regulations, and we are headed to a future where ESG would be nearly fully regulated, every aspect of it. And therefore, I mean, as you mentioned, there is diligence. Companies require that. They need advice on what is coming, how they can prepare on the existing regulations. They need advice on compliance. And imagine, like say taxation laws, different jurisdictions have different ESG regulations. And Indian multinational companies, they must comply with a number of ESG regulations across jurisdictions. So the regulatory compliance is becoming really complex. And then, with all these regulations, disputes are likely to arise, and we know they will. And in the West, I think climate litigation and other ESG disputes have become mainstream. And I have no reason to assume that we will not have such a scenario in the future. So therefore, law firms will have their hands full, I think, in this changing regulatory landscape. Businesses and investors will need ESG as a standalone service, as well as, ESG is going to be part of, all general corporate advisory and financing advisory, all of that. And I think the future of ESG is tied in well with the future of law firms, at least for this space and this sector.
Thanks for that, Bose. And I think it's time for like some quick answers from you and like some maybe fun answers. And maybe you can be more forthcoming if you want to be. One piece of advice for all the three key aspects and three key stakeholders in your practice area. I'll begin with the private equity investor. Second would be corporates or portfolio companies or investing companies promoters. And the third really is the regulator. If you were to have a heart-to-heart conversation with all these three of them, where they are in the ecosystem right now, what would be your one piece of advice to be quick one, like a two-liner for each one of them?
I mean, for the PEs, I think they while they have ESG going into their I mean the PEs do serious diligence, and they do consider ESG for their investment decisions. And here, I think they need to really walk the talk. And when a serious opportunity is in front of you, but it fails in ESG terms, I think they need to make the right choice. And I mean, there are investors making the right choice, and I have witnessed that also. So, what is the next one?
The next one is for your portfolio companies, the investing companies.
So investing companies, the businesses, industries at large, I would say, for them, this is an inescapable, transition. They must embrace it. Their survival will depend on it, one way or the other, whether it's to their markets, their clients, their consumers, their products, regulations, greenwashing, all of them will hit them. So they need to really embrace it, be serious about it. And if they are serious about it, and it's really going to benefit them.
And finally, the regulators.
Regulators need to be, practical. I think that's something, I would, number one, regulations are for, who's the regulation for? Who is going to comply with it? So they have to be kept in mind. Who is going to protect, of course, that is always there, and that is built into the regulation. But, if you have a regulation that is hard to implement, and it's going to, in some ways, force the companies to remain non-compliant, because there is no immediate practical way of complying with, then that's a bad situation. I think regulators should be cognizant of that, be practical.
Thanks for that, Bose. I think very well put. Be practical. The final piece of advice going to regulators. What a delightful and meaningful conversation or topic like ESG. I do hope that there's so much for our listeners to take home with in terms of either note taking or some very meaningful piece of advice coming from this. Till the time we see you next, here's goodbye and good luck to the listeners of Cam Radio. And thank you, Bose, for your time and energy for this podcast. Thank you.
Thank you. Thank you so much.